All right. Well, thanks for joining us for another segment of Investing Wizards. We are here with Ian McMillan of Adaptiv. Really excited to have him here. Ian is a analyst. He works at a firm that does technical analysis, but what's interesting is that they're also an RIA firm. And so that's kind of unique in that a lot of RIA firms do fundamental analysis, asset allocation, and Ian's firm does technical analysis, which is very cool. How's it going, Ian?
It's going very well. How are you?
Good. So we met at the CMT conference.
Yes, that was 2019.
Yeah, and when those things still existed, when people still met face to
I
face.
went to conferences. I got to say, I was pretty bummed. I was really looking forward to the one this April. Obviously, that got canceled for a good reason, but nonetheless, it was a bummer.
It'll just make the next one much better. So it's cool. So we met at the CMT conference. I followed your work on. You guys are very active on Twitter, posting ideas. I followed your work since then, and I've noticed that you guys have just made a lot of great calls and really kind of seeing the market both up and down and intermarket trends. So wanted to have you on, wanted to learn and understand your investment process. So maybe we can start with just, how did you get into investing?
How did I get into investing? Good question. So, not very exciting, but I actually grew up in a household where CNBC and Bloomberg were on a lot. So my dad worked in the industry on the fixed income side. So dinner time conversations tended to revolve around what the stock market did that day versus how was your math test. My parents were not bad parents. They did care about my education. But that's just, when your dad comes home and he flips on CNBC, you kind of at some point start paying attention to it. So was interested in the markets from an early age. Decided when I was in high school, towards the end of high school, that's, something I could see myself doing, and then, I could go to college and, major in finance, something like that. So that's really, I guess I would say, going back to just growing up with people always talking about stocks in my house.
Yeah, just kind of absorbed it and got more and more interested in it.
Mm-hmm.
And then can you just talk about what is your investment style now?
So investment style now, like everyone has taken it all takes us a while to find it. But I would say for now, it's pretty much pure technical analysis, not day trading or scalping or anything like that, but using daily and weekly charts, looking to hold stocks. Well, we'll hold them as long as they're in an uptrend. But we definitely want to be in a position, at least a week or two. I think when we enter something, we would like to be in it, a month or two at a minimum. So looking for setups that are going to provide that type of tailwind. And again, we're not trying to, catch something at 89 and sell it at 90.
Got it. So trying to catch sort of short to medium trends.
Yeah, definitely intermediate term is where I'd say we fall in.
Got it. And then when you are speaking or watching new technical analysts or new investors, what do you think are the most common mistakes that people make when they start thinking about technical analysis?
Common mistakes, I would have to say one that comes to mind would be this, probably on the RSI, so Relative Strength Index, something that's very popular. I think it is very useful. Unfortunately, in the technician community, we've labeled these certain areas on an RSI overbought and oversold. So above 70, people say that stock, when the RSI gets above 70, that now that stock is overbought. And that brings about a certain mindset that too many people have purchased this stock. It's, it's overheated. It's probably doesn't have much more up to go. Not true whatsoever. And I think, guys like JC Peretz, who I know you had on Investing Wizards, I think that was the first episode. I think
Yep.
you'd completely agree in that we definitely want to buy stocks and assets that are in strong uptrends. There's nothing bearish about a lot of people wanting to buy a certain stock.
Yeah. And I don't know, it must be the default label on some system with like overbought and oversold, because the first two of technical analysis is something that's going up as good or bullish, and something that's going down as bearish.
Yeah, and it's a shame that we've come up with those two words, and like I said, so below 30 on an RSI is it's oversold. That does not mean that it's ripe for a bounce.
Right. And then so you mentioned RSI. There's, I don't know, 50, 100, 150 technical indicators that you could see on all these different platforms. Koyfin has kind of the major ones. My feeling is that there are way too many indicators, and
There are a lot.
and there are too many because at the end of the day, technical analysis is about price, is about analyzing price. And there's just so many, there's not that many ways you could dissect price. There's only, you could look at the price change, or you could look at some kind of mean reverting, a series like an RSI or MACD. People tend to kind of like, I'd say new analysts, from my opinion, get confused because they are overwhelmed with all these indicators, and then they'll treat one indicator better or different than another indicator. And at the end of the day, the price chart is the only thing that matters. And all these other indicators are just ways to analyze that price chart.
I 100% agree. At the end of the day, like you said, price, and, we use a lot of support and resistance, and finding these areas where prices, had behavioral implications before. That's what we want to say. But agree. I mean, you see a lot of charts out there. And I'd say, and going back to, for though you had asked for those who are newer to technical analysis, I definitely think you want to simplify it. I've never really met a successful, or at least a consistently successful technician who bogged down their charts trying to read 5 or 6 different indicators and was only willing to trade when they all lined up perfectly. I think having a checklist of wanting to have a whole bunch of things line up just perfectly, you're going to sit around, you're going to miss a lot more sitting around waiting for those to line up than if you would just, for lack of better words, long above, short below, if you can find these areas of previous reactions in price. And then when that behavior changes, but yes, tons of ways, MACD, RSI, oscillators, indicators, you name it. They've come up with every mathematical way to try and, put a definition on price and momentum.
Price, right. And the thing is, like, most people don't look at the underlying calculation. They'll just look at this is the Arun, or this is the ADX. And then when you actually dig into the formula, all these formulas are just taking price and slicing it, like you said, either taking the change or using it as an oscillator, which means it mean reverts to some kind of central level over time. Cool. And so, and then is there anything about your style that you think is different than how other technicians or traditional technicians look at the market?
I think it's a lot, not to use this word again, we do choose to use a much more simplistic approach, versus, we're not big into Elliott Wave or things like that. It's very much, if this stock has been, last 5 times it got to 90, it sold off. And now today it just traded at 91. Well, clearly there's a change in behavior. So that's really what we're looking for. Changes in behavior, which can be viewed, that's all price is just people and their emotions buying and selling a certain asset at any given point. So I don't think that there's anything that sets us apart I'd say consistency. Once you find something that works, I wouldn't go and say, well, let me add a MACD and see if I can make it better. I mean, you really are probably going in the wrong direction if you're thinking that way.
Yeah, I hear you. Cool. Simple. I'm a big fan of simple, probably because I'm simple-minded, but simple is better when it comes to technical analysis, and probably in a lot of parts of investing, whether it's fundamental or macro or whatever it is. So let's get into your investment process. I'd love to kind of show people how you think about the market. You and I went over this a little bit before, but if you can share your screen and sort of walk us through these screens that you do in terms of identifying strength and weakness, I think that would be great.
Sure. Let me share this. So yes, this is kind of our start of our top-down process. So we use kind of some proprietary rankings to show us what are the strongest areas of the market, and we use ETFs to do this because there's ETFs for pretty much every single sector, industry, country, however you want to divvy up publicly traded equities around the world. There's probably an ETF for it, and many of them, multiple ETFs. So again, as part of our top-down process, we like to see what are the strongest areas on a relative basis, not an absolute basis, because to us, it's really hard to beat your index. For us, that's the S&P. It's really hard to beat the index if you aren't buying things that are beating the index.
Yep. By definition.
Yeah, that's kind of just simple math. But so again, for us, as you can see in our rankings, a lot of online retail, very, very strong.
So let's just go through kind of these columns, the changes, the price change. But so it looks like you're kind of looking at the relative strength, meaning that you're taking the price of the ETF, dividing it by the market, and then you are ranking it. Is that kind of right?
Yes. So 15 different, I won't call them signals and I won't call them indicators, but 15 different data points, we'll call them data points, that we think are important. And however many, obviously a 15 out of 15, all those boxes are checked. And then so forth, as you can see, this goes all the way down. Bets is a 0. It's because it has only been I think, been around for a couple weeks. But again, down at the bottom, we see lots of volume, things like this. So it works both ways, 0 to 15.
And then what are the next columns kind of the disaggregation of that score?
Yeah, so we look at where these ETFs ranked 2 weeks ago, or 10 days, and 10 trading sessions. And then we can see in this, the fourth column technically, but this RS difference, we can see which areas of the market have had the biggest jumps in relative strength over the last 2 weeks.
So what's improving and what's getting worse?
Exactly. So you've had your, again, big drops over here from water, utilities, healthcare services, Russia, and big jumps in a lot of Chinese-related areas. We're back in a lot of Asian areas. Still very growth-oriented.
So let's say I give Adaptiv $100,000. How do you then invest that $100,000?
So you would meet with our financial planning team. They would do a risk assessment, and then you are put into, we have 4 models. Most RIAs run your typical gamut of growth through, conservative. And that's really just a efficient frontier. It's a fancy way to look at an efficient frontier of how much risk clients being able to take. And so obviously equity exposure is scaled up from, ultra conservative, probably not having a lot of equity exposure, 0, maybe 10%, all the way up through growth, which is 100. So we just run 4. It's pretty much balanced through ultra growth. And so really They're all involved in the same things. The only thing that's different is that growth and ultra growth can be more than 100% invested, and you will see more of the individual stocks that we select in those models.
Got it. Got it. So depending on the risk tolerance, will determine the composition of what's in the portfolio. And so kind of the more aggressive, the more, so let's say let's say my risk tolerance is low, like let's say it's very low. What would you then how would you allocate that $100,000?
You'd probably be in our lowest model. So balance, it's going to be 50-50. So essentially your benchmark is going to be 50% S&P 500, 50% Barclays aggregate bond. So we also use this in the fixed income world. We do have rankings for fixed income, right? Because we're not, if our fixed income index our benchmark is the Barclays aggregate, then we can be in other areas of fixed income, whether it's munis or high yield or mortgage-backed securities or international bonds. So this works, relative strength doesn't just work with equities, it works in the fixed income world as well.
Got it. Okay. Makes sense. So basically you pick a risk tolerance, you determine a risk tolerance, you determine the benchmark for that risk tolerance, whether it's all equities or a mixture of equities and fixed income, and then you try to beat that benchmark through your models.
Yes.
Got it. Makes total sense. Cool. That's awesome. And then how big are you guys? How big is your firm?
So it's about 90 million. It's pretty young, only about 3 years old. So growing really quickly. We've got it. In fact, we have a new junior analyst that's on the team looking to really grow. That's
awesome. Well, I think if you keep making these great calls that I've seen you make since I've met you, I think you guys are going to be very successful. So let's kind of switch screens, and this isn't the Optima podcast or video cast. This is the Koyfin video cast.
Absolutely.
So let me share my screen, and then we will go through some of the kind of like top ideas or top ETFs that rank really well on your. And can you see my screen? Okay, and let's turn off the video. I feel like it'll work just a little bit better. So feel free to kind of shut your video off.
There we go.
Perfect. All right. So the highest ranking ETF that you had was which one?
So the highest ranking ETF in our rankings, well, looks like there's about 8 that score a 15 out of 15. And so an interesting one, let's do FINX, Global X Fintech ETF.
FINX. All right. So FINX, I'm looking at kind of like the snapshot, Global Fintech ETF. Obviously looking pretty good on the chart, going up. And so this isn't kind of like making a new high relative to other ETFs, like which are making new highs. This is right at its peak. Why is it sort of why is it ranking so well on your metrics? Is it the change?
Well, now, yeah. So it's really about the price performance and being, again, on a relative basis, having a strong RSI that's on a relative basis, being above moving averages, having separate signals. So the rankings aren't going to tell you, don't buy this because it's running into resistance. That's kind of would be the next layer. This, rankings only get you so far. Then we have to start diving into price. So on something like this, while it is very strong, you would probably still want to wait for it to hit new highs before you got involved.
Right. And so that goes back to kind of like the price is the ultimate arbiter or the ultimate determinant of technical analysis. And then kind of like traditional technical analysis to tell you made a peak here. It's right at its peak here. So it looks like this is resistance right now. But based on your model, because it's had such good relative strength, which means it's outperformed the SPY, that's why it's ranking so well.
It's ranking high, has a lot of strong underlying components. And so, yeah, again, so obviously not all science, we are not a black box. So we don't just take, if it ranks a 15, it gets put in the portfolio. That's not how we really view it. This is just to help us narrow down what could be working. And underneath these ETFs, you will find holdings that are moving higher and may even have a better technical setup.
So let's actually do that. Let's go to the lots of charts feature.
Okay.
Which I love because you can pull up lots of charts. And so what you can do here is you can select kind of one of the indices, or you can select an ETF, and it'll pull up all the constituents in here, which is awesome, which is kind of like how I like to look at it. And
we use this a lot on a day-to-day basis at Adaptiv.
Oh, cool, yeah, and we have a bunch of right now. Doesn't give you a lot of flexibility on the charts you can pick. So you're gonna be basically able to load a template and look at all these on some predefined template that you build. So it's gonna be much more useful. I think, and we have that in the works, and that's pretty close. But so looking at the constituents here, and so right here we're looking at 12 out of 19. The biggest one here, PayPal, clearly making a new high, right?
Clearly, yeah. PayPal on this very strong uptrend now. Looks like the others, whether it's Intuit or Fiserv, Square also has a nice breakout. So some of those not quite there. And, there's nothing wrong with just owning the ETF.
Right.
So if you've got, if you can decide, and I'll admit that this does happen sometimes when you've got a lot of, let's say you are looking at an ETF and they had a lot of charts that looked like PayPal. And you said, well, gosh, I don't know if I want to pick just one out of these 8. I think that's a great reason to go ahead and just buy the basket.
Yep, absolutely. Especially if you don't feel like spending your time analyzing the company or having taking single stock risk, because
absolutely. And that's really a big part of kind of how we build portfolios is the large indices are probably going to have the main indices are going to have the largest weightings. Then we move into sector and industry specific ETFs, and then usually our basket of equities. Stocks usually get an individual stock will usually only get about a 5% position. So there are lots of times where we will buy a stock we'll hold the ETF and buy a underlying holding as well.
Like the strongest stock. So let's just go. So Square to me looks like a great chart, and I'll get let's cover that in a sec. Let's cover the rest of these stocks. So it's kind of interesting. So you actually have a lot of a big dichotomy here. Some of these stocks actually don't look that great, and then other stocks like PayPal making new highs, and other stocks near their highs. But Square, if I just open up a chart of Square, this is one of my favorite setups. I'm just going to change this to daily. And that's a stock that trades in a sideways consolidation for a long time.
Yeah.
And starts to break out from that consolidation. Those are my favorite types of technical setups.
And, that's so where a lot of people would look at this chart and they would say, wow, it's up, from 35, 33 bucks at the March lows. It's already up to, it's almost $100. It's gone too far. And that is true. It has run up a lot, but in the grand scheme of things, going back to your point, I could argue it's gone nowhere for 2 years.
For 2 years, right? And you don't look at you'll never look at fundamentals, will you?
So, a simple answer is no. We are not looking at fundamentals. If we did, and in some of the individual stock selection, There are fundamental reasons, and we would keep that very simple. If there is going to be, it would probably just be like earnings and sales growth.
Yep.
Probably kind of more of the IBD mentality. And so, but no, to answer your question, I haven't looked at a financial statement professionally in years.
Good.
I can tell you, when the stocks that we buy, I couldn't tell you one thing about their balance sheet or,
Right. The fundamentals, right. Which is just another way of investing, which is saying kind of like, look, the stock price or the technicals reflect all the fundamental information. I'm not going to try and predict whether this revenue growth is going to go to 60% or 10% because the stock price is telling me that it's either going to stay high or the stock likes something about this. But looking at the fundamentals, the stock has sort of traded sideways for a long time. Revenue's growing in the order of 43%. If we look at kind of the estimates for the next couple of years, at least on a revenue basis, they're expected to grow kind of 25, 28%, 2021, 2022. In here, I believe there's actually an accounting change that causes this decline or this number to look pretty low. I've actually had that question before, but I believe it's an accounting change. But revenue growth pretty high. And then on the going back to this chart on a fundamental basis, on the technical basis, this is great, and it hasn't broken out yet. Like it's right on the cusp.
Now, although there's some short term, right there above. What is that? 85.
Let me actually I'm going to give you control of my mouse. And so where are you looking?
If we're looking at now, yes, we had this, big top back in Q4 2018. But, a lot of people would say that this is kind of a base here at this 85, 86 area that now we've had a retest. But yes, you would want to see at this point, I think you got to wait for it to break out to new highs just to confirm that we are going to move higher.
And that's one of the things, I love this term that one of my former colleagues used to use, is he would say, don't predict the predictor. And he would say something like, if this is the top, if this is resistance and you're waiting for it to break, on a technical level, don't predict this.
Yeah.
Meaning like, let the market tell you that this is going to be broken. And that's actually the technical signal, because right now, what can happen is it actually could trade sideways.
Absolutely. And then you could put the trade in, put your stop in, at wherever you want to pick, if it's, $77, whatever that last little pullback is.
Right here.
Yeah. Or I guess that's, what is that? Closer to 84.
Yeah.
84. And we could trade sideways, and then you never get stopped out, but it never breaks out. And then it's just an opportunity cost sitting in your portfolio where that could have been allocated to something else in the meantime.
Right. And so here, like Spotify today was a big, right. Kind of like, this is the same pattern, obviously no history here because it went public, but traded sideways since it went public, went nowhere. And then recently broke out of this kind of like, and you could see that this was a big resistance level, kind of resistance here, and then today it broke that in a very decisive way. And so this technically means that it should start a new uptrend.
Yes. Got
it. Cool. All right. So touched on FINX. There's one ETF I saw on your list. Is
QQ? Yeah.
Was it Chinese technology or was it emerging markets technology?
We can do either. CQQ is another. It's also very high in our rankings. It's 14 out of 15. So there is emerging market internet, but there's Chinese internet as well. So whichever one you want to discuss, I'm open.
Cool. So how would you, so let's say we looked at this versus EMQQ, and we looked at these two charts, right? Um, they're, they're very similar. Would you say one is a better chart than the other, and what makes one a better chart than the other?
So I would say, so they've both broken out above their February highs, which is good. I would say they're both pretty equal on, I mean, they're almost, obviously very highly correlated on an absolute basis. On a relative basis versus something like the S&P like you've shown, I give the edge to emerging markets because it's already made new relative highs.
Right, over here. It's made
So that's another thing we have to consider is just like there's support and resistance on the individual chart by itself, it's also true on a relative basis, and using kind of your what you had just mentioned, don't predict the predictor, you would want to wait for it to make new all-time highs. So if someone came to me today and they said, I'm making you buy one of these, right? As of today's close, I think it would have to be EMQQ.
Right, because EMQQ here is already made a new high. On a relative basis. It's much stronger, made a intermediate or medium-term high, whereas CQQQ still looks good, but still hasn't made new high in here.
Not above its early 2018 highs and lagging. I mean, still outperforming over the last week or so, but so let's EMQ, kind of the higher beta play, more of the, I guess, the pure emerging markets exposure is winning the race so far.
Got it. And then here, one stock, another one you mentioned to me is KMED.
Yes, emerging markets, also very strong on emerging markets healthcare, very strong on a absolute and relative basis.
And so what I'm hearing here is a lot of emerging markets, and that's a theme that that I wrote about this week in terms of, I think there's a major turning point in the dollar, and the dollar is going to weaken from here. That's going to benefit emerging markets. So if we actually, let me just pull it into here. So if we think about emerging markets, this chart is actually not this is not kind of like a very, very bullish chart, because on a relative strength basis, it's been going down. I'm making a fundamental call, and I'm actually saying that this, or kind of like in here, is probably a bottoming process.
I can definitely see that.
But it's not confirmed by the technicals.
Well, and if you've got, I think EEM, it's 30% Chinese equities. So if China's moving higher, then I certainly think that would be a tailwind for the rest, for the ETF itself.
Right. And yeah, I hear you. Got it. And then the other ETF you mentioned to me before are the ARCA ETFs?
The ARC ETFs, yes, ARC Invest. ETFs.
So ARC W is one of them.
Yes. I think there are 4 very, very, very strong ETFs.
So next generation ETFs. The manager of these ETFs loves Tesla. So Tesla is a large weight in these ETFs. But given the fact that Tesla is, and let's just go through the kind of like lots of charts.
Yeah, a lot of these charts will be at or near all-time highs.
Got it. And so if we kind of think about the market cap, it's all tech stocks, and it's all tech stocks that are trading. And we know tech stocks are doing well. Tech stocks that are trading near their all-time highs. And let's look at And do you know how, like, what is the, how do they pick the stocks in the CTF? Is it a
Very fundamental.
very fundamental?
All
Got it.
fundamental.
So it's kind of like the next generation high growth companies.
Well, and so, you can take, if you know how Kathy and her team build their ATFs, like, right, they're not in there looking at charts. So I can kind of say that knowing that this is such a fundamental based holding selection, I mean, I can say that and clearly people that are extremely smart, much smarter than me when it comes to reading financial statements and figuring out, where, things are headed and being able to do projections out multiple years. They've kind of already done that work for me. So if the technicals are lining up and the fundamentals are lining up, it's a pretty sweet spot to be in.
Or they're just looking at the charts and saying that they're looking at fundamentals, which they're really
They could be.
which the more time I spent on Wall Street, the more I realized that a lot of people do that. A lot of fundamental analysts will just look at a chart.
That is very true, but you can't write that, right? You can't write that in a brief.
You can't write that
to clients,
right?
Why you're putting a buy recommendation on a stock. You can't just fax them over a chart and say, well, it broke out to new highs.
Right. The stock is going up, and that's why then they wouldn't get paid the salaries.
Well, and how many times do you see when a stock does break out above resistance or below support, these the investment banks come out, they raise their price targets. Like the day after a breakout, all of a sudden, I know nothing changed fundamentally in the last 24 hours. So apparently it's just a huge coincidence that, this stock has been now trading at its highest level in 2 years. And the analyst has decided that, well, I'm going to take my neutral rating off and I'm going to put on a buy rating.
Right. So here, if we look at the price target, the analyst price target as like one thing, and we'll just kind of move it up here. And then we look at the estimates, which is the EPS estimates that they're forecasting for next 12 months. So it's kind of interesting here. Analysts are not taking up their estimates, right? Estimates have been flat since May, but as the stock continues to go up, people are taking up their price target. So the price target here is following the stock.
Well, yeah, I mean, you don't want to be the one guy on the street with the lowest price target on Apple.
Right. So, and you could see that actually happen so many times here, where the estimate of what the company is going to earn stays flat, doesn't change, and the actual price target is moving up and down with the stock. Cool. All right. Awesome. That's really enlightening and insightful. I love your investment process. As I said, since I've been following you guys, have made a lot of great calls. Wanted to wrap up with a couple of questions on a personal level. Ian, what's been your favorite Netflix documentary over the past year?
Favorite Netflix documentary? I mean, is it too cliche if I say Tiger King? Tiger King was entertaining.
I mean, it's objectively the best, the best documentary / anything that came out. So,
there's not a lot to do during quarantine, so you might as well watch that saga unfold. And now they're coming out with a TV show.
What was it before?
It
was a document. This is kind of going to be kind of like a weekly TV show
on Fox. Yeah, Nicolas Cage is going to play Joe Exotic.
I think Nicolas Cage is the worst actor ever made.
So my wife literally will leave the room if I turn on something that has Nicolas Cage in it.
I almost think he does a parody. Like, I'm just like, I think he's just kind of like.
Is him.
Oh man. All right. Nicolas Cage and Tiger King. I would love to watch Tiger King play Nicolas Cage in when he gets out of prison.
That would be better.
In 5 years, where do you want to be? Where do you want to be professionally?
I think where I'm at, at Adaptiv, we're building a great team. I'm very, very happy there. So honestly doing the same thing we're doing, helping people grow their money in, with a risk management process, helping people, educate themselves on the market.
Cool. Sounds good. And then how can people follow your market views?
So on Twitter right now, we have a podcast that comes out we record it every Friday after the market close. You can listen to that. And then we should have a new website available in about a month that will have a lot of resources on it, and we'll be probably putting a lot more of our work there, or at least being able to host more of it there, like our rankings and things like that versus Twitter. So really excited about getting that out to the public.
Got it. Awesome. Cool. Well, I really appreciate you being on the show. Really interesting. I've learned a lot. I think you guys have a great investment style, very different than what everyone else is doing, and looking forward to seeing and following your stuff.
Awesome. Well, thanks so much for the time today.
Thanks, Ian.